In today's show, crypto market bloodbath leads to over $500 million in liquidations in the past 24 hours, quitting crypto chase. Well, hopefully that was liquidity seeking. Otherwise, it's over and quitting crypto capo. Second option playing out, any test at 23,500 as resistance is a good sell opportunity. Consolidation below 22,500 would be very bearish. It equal 21,000 or lower. New lows are just a matter of time. And quitting venture founder, Bitcoin made a nice relief rally in the past 2 weeks, but the bearish RSI divergence has always been in the background. If Bitcoin breaks below 22,000 again, I think it is likely we see the $18,000 low again. Also in today's show, weak address growth points to Bitcoin price failing to sustain $25,000. As shared here, even after the relief rally on Bitcoin in August, the monthly RSI is still below the 2018 cycle bottom level. Bitcoin is still very oversold, though highly unlikely we're in a new bull market. Sub 23,000 Bitcoin is still a decent price to buy for the long term. And as Dan Held shares here, gold is at the same price as it was in September 2011. Bitcoin is up over 400,000% over the same time frame. Also in today's show, can exchanges create imaginary Bitcoin to dump the price? Crypto platform executive answers yes. The exchange just adds these funds to the account, creating these Bitcoins only in their system that do not exist on the Bitcoin blockchain. The client or internal market making team then sells these Bitcoins equivalent to $100 million, dumping the Bitcoin price on all exchanges. Also in today's show, BlackRock, Google, and Morgan Stanley investing billions of dollars into the blockchain and crypto technology. According to this latest report, I'm going to be sharing with you the most active investors in blockchain companies over the past year. Also in today's show, never bet against it. Exchange CEO reveals $2 million Bitcoin price prediction and why he is still buying Bitcoin. Quoting Jesse Powell, the Kraken CEO, I am still hopeful I'll be able to buy a Bugatti by the end of the year for one Bitcoin. Now, Bugattis start at around $2 million, just saying. And also quoting him here, I bought in at Bitcoin again at 18,000 and I'm happy to ride it back up. And he says he is still bullish on the long run due to Bitcoin's fundamentals continuing to improve. And he says, I'd never bet against Bitcoin. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. Also do a $50 Bitcoin giveaway every single day. And the winner from yesterday's episode is Stefan Minton. Congratulations. He wrote the following comment: go crypto, give me that BTC. Congrats fam, you just won $50 in Bitcoin in today's Bitcoin giveaway. Please reply to this comment with your Bitcoin Addy so I can send it to you. HODL gang. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below, and a random comment will be selected as the winner in tomorrow's episode. And if we can get to 1,000 likes, I'm happy to give away $100 in tomorrow's show versus 50. So are you game? Let's make it happen. And today's episode is brought to you by iTrust Capital, the #1 crypto IRA platform in the world. They're now offering staking with Polkadot in your crypto IRA, so you can earn staking rewards tax-free. You can also buy, sell, and trade 25 plus cryptos, as well as precious metals, gold, and silver. There are no monthly fees and only 1% transaction fees. They offer institutional grade storage, and you can get started today with only $1,000 to set up your account. And if you sign up today, you're going to receive a $100 reward for funding your account and use my referral link in the description right down below. Also like to point out they have over $6 billion in transactions and over 175,000 accounts created with 2,000 plus 5-star reviews, truly making iTrust Capital a no-brainer. So go ahead and use my referral link in the description right down below and let's get this crypto tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, my crypto fam? Welcome to podcast episode number 1022. The crypto market registered a major slump this morning on Friday, resulting in major cryptos losing key support and falling to new monthly lows after a prolonged bullish surge over the past month. Bitcoin, which was looking to break through 25,000 resistance last week, fell below 22,000 to register a new 2-week low of 21,700. And Ethereum has surged past 2,000, but currently just below $1,700 at the time of this recording, down about 10% for the day. Now, the flash crash after weeks of bullish momentum also saw 157,000 traders get liquidated in the past 24 hours. Like, whoa, resulting in liquidation of over $551 million. Now, data from CoinGlass indicates that Bitcoin traders lost over $203 million in liquidations, followed by Ethereum traders at $140 million in losses. Now, the following liquidation chart indicates that the number of liquidations liquidated long positions outnumbered the short ones by a significant margin, indicating that the market sentiment was highly bullish until the flash crash. Now, the value of short positions liquidated was only $41 million against $398 million in long positions, which you can see here in this chart. Meanwhile, Bitcoin futures long liquidations reached an 8-month high of $84 million on OKX, breaking the previous high of $48 million observed on May 5th. Now, the sudden plunge in the crypto market is being attributed to the Fed's expected interest rate hike in September. August consumer CPI data came in lower than expected, leading to a bullish surge in crypto and the Forex markets alike. And Federal Reserve Bank of St. Louis President James Bullard said he would favor a 75 basis point increase. An interest hike by the Fed next month could lead to another downturn, and a similar interest rate hike of 75 basis points in June led to the crypto market turmoil after an initial price surge. And quoting Crypto Chase, well, hopefully that was liquidity seeking. Otherwise, it's over. Bitcoin, Ethereum, and Crypto Capo says second option playing out. Any test of 23,500 as resistance is a good sell opportunity. Consolidation below 22,500. Clean break plus the use of level as resistance would be very bearish and equal 21,000 or lower. New lows are just a matter of time. And he's referring to his previous tweet he shared here. Two options, both bearish, up to 25,400, 25,500, and then a reversal of this medium time frame bullish trend straight to new lows, or number two, straight to new lows from here. Bearish confirmations below 23,500 and below 22,500. Bullish continuation consolidation above 26,000. So there you have it. And quoting venture founder, Bitcoin made a nice relief rally in the past 2 weeks, but the bearish RSI divergence has always been in the background. 22,000 was June high, and now the 50-day moving average, which seems to hold the support thus far. If Bitcoin breaks below 22,000 again, I think it is likely we see the $18,000 low again, which he shares here in this chart. Let me know if you agree or disagree with the crypto analysts. And before I break down next story of the day, weak address growth points to Bitcoin price failing to sustain $25,000. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptos are currently correcting and in the blood red, with Bitcoin down 9% for the day, maintaining just above 21,300 at the time of this recording. We got Ethereum down almost 10% for the day, trading back under $1,700, while Binance Coin, Solana, Polkadot, Avalanche, XRP, and Cardano all correcting and in the blood red. But all right, now let's break down our next story of the day. Bitcoin is staging a repeat of price action from May with its latest drop. The latest data shows, after taking some by surprise with its magnitude, the latest snap losses for the Bitcoin price action are still playing out. After falling from 23,800 to a low of 21,400 in a single hour, the largest crypto is now attempting to establish support near its realized price, and just below 22,000. Realized price refers to the sum total at which the entire Bitcoin supply last moved. The setup will be more than familiar to any market participants, as realized price formed an initial support line during Bitcoin's descent back in May, immediately following the Terra Luna blowout, which you can see here, the realized price for the King crypto. Now, with history rhyming, at least on the chart, it remains to be seen whether other recent points of interest will continue to play their role, and among them is the 200-week moving average, a hard-won support level in July, now seemingly lost in one fell swoop. The 50-day moving average cleared in late July. It is also back above the spot price at $22,200. As venture founder shares here, even after the relief rally on Bitcoin in August, the monthly RSI is still below the 2018 cycle bottom level. Bitcoin is still very oversold, though highly unlikely we're in a new bull market. Sub $23,000 Bitcoin is still a decent price to buy for the long term, holding until the next cycle. And going into the Wall Street Open, U.S. equities futures showed that more downside was to come, implying more pressure on the crypto markets. And a look at network activity growth during the August run to over 25,000, meanwhile produced bearish conclusions for crypto analyst Philip Swift. In a fresh tweet on the day, the creator of analytics resource Look Into Bitcoin noted that address growth had not matched similar price appreciation phases this time around. Quoting Philip Swift here, active address sentiment indicator has been indicating that the current price move has not been supported by a sufficient increase in active addresses on the Bitcoin network. And he also shares here, experienced local highs when this has happened previously, which you can see here in this chart. Numbers don't lie. And this comes despite the total number of Bitcoin addresses ever created passing 1 billion this week, according to data from on-chain analytics firm Glassnode. 1 billion addresses, and we're just getting started. Bitcoin is less than 13 years old. Let's go. And as Dan Held points out here, gold is at the same price as it was in September 2011. Facts, Peter Schiff. Bitcoin is up 4,000% over the same time frame. So what is a better investment over the past decade? You do the math. And what will continue continue to be the greatest investment in human history? You already know, fam. And before I break down next story of the day, can exchanges create imaginary Bitcoin to dump the price? Crypto platform executive answers yes. But before I break this down, first let's take a quick look at the overall crypto market cap, barely holding on to that $1 trillion milestone with about $82 billion in volume in the past 24 hours. The current Bitcoin dominance back on the decline at 39.8%, with the Ether dominance at 20.3%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have GNO up 5%, trading at $184, followed by stablecoins, because practically all of the top cryptos are currently correcting and in the red. And checking out the top 100 cryptocurrency gainers for the past week, again, you can just see a sea of red with literally only 3 out of the top 100 actually in the green, including Chili's up 27%, Leo up 9.3%, and Celsius up 8.2%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated a 33 in fear. Yesterday a 30, last week a 42, and last month a 31 in fear. But all right, now let's break down our next story of the day. One of the most substantial value propositions of Bitcoin is that no one can create more of it apart from its fixed supply. However, an executive from a crypto exchange made a bold claim that some exchanges can create and sell Bitcoin that's only in their system, not on the blockchain, to obviously manipulate the market. We all know it happens, right? In a new interview with Cointelegraph, the CEO of crypto exchange Exmo shared his beliefs that market manipulation is still prevalent in the digital asset space and gave an example of how it can happen. According to the executive, if anyone wanted to dump the market, it's possible to go to an offshore exchange that does not go through financial audits and ask for $100 million worth of Bitcoin and use 10 million Tether as collateral. He explained that the exchange just adds these funds to the account, creating these Bitcoins only in their system. They do not exist on the Bitcoin blockchain. The client or internal market making team then sells these Bitcoins equivalent to $100 million, dumping the Bitcoin price on all exchanges. And to get their profits, the market manipulators can then profit from arbitrage, according to him. And after the price is down, they buy the same amount of Bitcoin at a much lower price to make a profit. He added, now the CEO said that fighting and preventing these potential events require strong regulatory policies that are as comprehensive as the stock market. And he also highlighted that offshore exchanges must also be regulated in the same manner as tier 1 exchanges, or have transactions between regulated and offshore exchanges be limited. And with this, the executive believes that the market will be a better place for investors of all sizes. Now, additionally, the executive pointed out that one of the barriers to the mainstream crypto adoption is the money laundering concerns. According to the CEO, compliance and more comprehensive regulation will make these concerns go away. Quoting him again here, crypto is a new thing that evolves quickly. It's highly similar to traditional investment vehicles in essence. Therefore, I think there are many things that we can borrow from the stock market where regulations have been tested over a long time. Now, lastly, the executive explained that at the moment, malicious entities like hackers are more attracted to targeting crypto rather than banks because of holes in security. The executive noted that security is also a key to a broader digital asset adoption. So there you have it. Exchanges are absolutely manipulating the crypto market. It is what it is. You heard it directly from the executive himself. And before I break down next story of the day, BlackRock, Google, and Morgan Stanley investing billions of dollars into blockchain and crypto technology, according to this latest report, as well as never bet against it. Exchange CEO reveals his $2 million Bitcoin price prediction. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith that like button and drop a comment below, and a random comment will be selected as the winner on tomorrow's episode. And as I said earlier, if we can get today's video to 1,000 likes, which should not be difficult considering I get thousands upon thousands of views, then I will start giving away $100 on each Bitcoin giveaway, and we'll turn it from a $50 Bitcoin giveaway to a $100 daily Bitcoin giveaway. Are you game? Let me know in the comments below. But all right, now let's break down our next story of the day. 40 of the world's top 100 public companies by market cap are reportedly pouring in billions of dollars into blockchain and crypto firms. According to a recent report from crypto analytics platform Block Data, 40 firms have invested about $6 billion into blockchain and crypto companies between September 2021 and June 2022. So ultimately, in the past year, and using these figures from market intelligence platform CB Insights, Block Data reports that Google's parent company Alphabet has the biggest stake in blockchain. The California-based firm invested $1.5 billion in startups, Fireblocks, Dapper Labs, Voltage, and Digital Currency Group. Now, the world's largest asset manager, BlackRock, is the next biggest blockchain company investor with $1.1 billion worth of investments in FTX. Circle and Anchorage Digital and banking titan Morgan Stanley ranks third with $1.1 billion as well invested in Figment and DIG. Quoting the report here, the investors active in the biggest funding rounds are Alphabet, BlackRock, Morgan Stanley, Samsung, Goldman Sachs, BYN Mellon, and PayPal. And among the group, Samsung is the most active, having invested in over a dozen crypto firms. And the South Korean phone maker infused over $979 million to 13 companies, including Anamoca Brands, Dank Bank, Flow Carbon, Saga, Big Whale Labs, Atomic Form, FanCraze, and the list goes on. And in total, 61 crypto companies received investments from top public companies during the period. And of these, 19 offer NFTs, related solutions and services, and 12 are marketplaces, and 11 provided gaming services. And here in this chart, you can see the most active investors in blockchain companies over the past year. And you can see Alphabet, BlackRock, Morgan Stanley, Samsung, and Goldman Sachs leading the pack. So there you have it. And now let's break down our final story of the day. Chief executive of Bitcoin and crypto exchange Kraken said he'd never bet against Bitcoin and expects to be able to buy a Bugatti, which is one Bitcoin, by the end of 2022. Let's freaking go. Quoting him here, I am still hopeful I'll be able to buy a Bugatti by the end of the year for one Bitcoin. And quoting him again here, I bought in Bitcoin again at $18,000. I'm happy to ride it back up, referring to the recent dip. He took advantage of it. And he also says he is still bullish on the long run due to Bitcoin's fundamentals continuing to improve. I'd never bet against Bitcoin. You damn skip it. Now, the Bitcoin price has fallen sharply since hitting the all-time high of almost 70,000 per Bitcoin late last year, back in November, due to an almighty price crash that wiped around $2 trillion out from the combined crypto market. However, many in the Bitcoin and crypto space remain confident of the price of Bitcoin, Ethereum, and the smaller cryptos. Now, Powell, who has become the subject of controversy in recent months after the New York Times reported he created a culture war at the San Francisco-based exchange, and also doubled down on previous Bitcoin price prediction that one Bitcoin could be exchanged for a Bugatti luxury car by the end of 2022, giving Bitcoin a price between $2 million and $3 million. Actually, Bugattis go all the way up to $8 million, so that's a $2 to $8 million price prediction. Just saying. However, some fear that Bitcoin, Ethereum, and the other major cryptos can see a pullback in the short term after storming higher. Quoting a senior financial analyst, the possibility of a correction in the short term cannot be dismissed, especially after the recent wave of strong gains. So there you have it. What are your thoughts about the Kraken CEO Jesse Powell saying he is still hopeful to be able to buy a Bugatti by the end of the year with one Bitcoin? I respect his relentless optimism. That's a Bitcoiner for sure, a true OG. So much respect to Jesse Powell. And now for a quick recap, what I covered with you here in today's show. Crypto market bloodbath leads to over $500 million in liquidations in the past 24 hours, as well as weak address growth points to Bitcoin price failing to sustain $25,000. We also discussed, can exchanges create imaginary Bitcoin to dump the price? Absolutely. There's market manipulation. We also discussed BlackRock, Google, and Morgan Stanley investing billions of dollars into the blockchain and crypto technology, according to this latest report. And we also discussed the Kraken CEO Jesse Powell's relentless optimism and saying, I am still hopeful to be able to buy a Bugatti by the end of the year for a Bitcoin. Now for the top 3 comments from yesterday's episode. 345 Hugo wrote, thanks for keeping us updated, JV. Been watching the show for a few years now, and you never fail to keep us updated on the good stuff. Much love and respect, fam. I appreciate your continued support. Hodl. And our next featured comment comes from Steve M. Great content today, JV. Yes, I absolutely agree that Gary Gensler is intentionally holding back a Bitcoin spot ETF approval to give his institutional friends time to load up while they sow confusion amongst the masses. Approval of a Bitcoin futures ETF is great for hedge funds, not consumers. He knows this. Shameful. Spot on, fam. You nailed it. And our third and final featured comment comes from J Dub. When you eventually will be given $100 in Bitcoin, will it be $100 to one person or $50 to 2 people? I vote $50 for 2 people. Love the show. Great question. I could actually do a poll here on YouTube and ask, what would you rather have once we start getting 1,000 likes per video? Would you rather me give $100 to one person or $50 to 2 people? Actually, let me know right now in the comments right down below. And to be featured on tomorrow's episode, drop a comment below and you'll automatically be qualified to win $50 in tomorrow's $50 Bitcoin giveaway. But like I said, if we can get today's video to 1,000 likes, I'm happy happy to give away $100 in tomorrow's Bitcoin giveaway. So let me know. Let's make it happen. Are you game? Holla at your boy, and I look forward to seeing you on tomorrow's episode. Peace.